Okay, listen, we have a lot of work to show, and I'm not going to waste time speaking about ourselves, almost at all. Just a couple of things. Does this work? No, it doesn't. Okay, here we go. Disclaimer, you've seen that? Okay, only one thing, and that's because of credibility. So we do value on the long side and activist short on the short side. And we're very risk averse, so I'm not too courageous. Usually I'm very scared of speaking publicly against a company, so I only did it twice. First time it was a company called American Addiction Centers. Company stock collapsed about 75% about 2 weeks after the report. The second time, which was about 2 years ago, it was this Greek company called Global. We wrote a report. 12 hours later, the stock was suspended. 48 hours later, the CEO and the CFO resigned, admitting all the fraud allegations. That's it. This was 2 years ago. We did a lot of undercover, behind the lines, anonymous things, but we never spoke publicly. Why am I telling you this? Because if I say something in public, I only do it if I'm 100% sure, as much as an investor can be about the thesis. So let's see the next news. The company is Folli Follie. We have a crowd which is mostly composed of men, so I assume many of you will probably not be too familiar with the company, but maybe some of the ladies in the room will know about it. And we believe maybe this company can be the next Greek Parmalat. The first one was Global. This is the company. It's not a small company by any means. It's over 1.3 billion euros of sales, $1.5 billion of market cap, profitable, grows very fast, and it trades in the Greek stock exchange. It's not super easy to trade, but there is a lot of borrow, so if you want to bother open an account over there, you probably can do it. But of course, we're not giving advice here. It's just for information purposes. The products are kind of cute. It's a kind of smaller, cute Greek Louis Vuitton. Actually, as a matter of fact, I bought a nice purse to my wife during one of the visits, which, by the way, helped me a lot during the composition of the due diligence. She's standing right here, Maya. And so these are the products, watches, purses. Important here is most of what they do is jewelry, bags, and watches. The rest is a department store in Greece. It's a pretty small amount of revenue and some smaller business in Bulgaria. This is important. 70% of the revenue and all of the profit originate in Asia. So this is a Greek company. It's a European company, but most of the money comes from Asia. And most of that Asian money is actually China. A roaring tiger, at least on paper, so double-digit growing, both revenue and earnings, and only a 4.4 PE, which probably suggests that we're not the only ones that are a little skeptical about this company. This is the chairman and also the largest shareholder and founder of the company. They're usually very optimistic and enthusiastic, and I quote, "Activities exhibited remarkable growth. We expanded our footprint in new markets, and we're prepared for the next stage of development." And they're expanding in the United States. Great. In the process of entering new markets, and for the Folli Follie and Links of London brand, we're investing heavily in the United States. Please remember this statement well. We'll get back to it. They claim 930 points of sale worldwide in 30 different countries, and that's straight from their annual report of 2016. They just published it 2017. I haven't seen anything that makes me change my mind. Especially in Asia. So a lot of these points of sale are in Asia, and most of those are in China. 240 in China and 65 in Japan. So points of sales, in other words, shops. The reality, according to us, is a little different. We believe, according to the due diligence that we did, that actual Asian sales, so most of the sales are actually probably a small fraction of what it looks from the accounting. Profit could be negative. The network looks less than half of the size of the network that appears in the annual report. It looks like business is shrinking very rapidly. We have very serious doubts about the cash balances of the company. We're worried about insolvency. And finally, after seeing all the evidence, we want to ask yourself, can you really trust the books? Can the shareholders really believe the books here? We did a large investigation, 3 months, 3 different continents, dozens of live interviews, 600 telephone calls, full digital presence audit, and finally, we did some very thorough Chinese government record searches. So the first question is, how many points of sales, i.e. usually shops, do they have? Again, the company said 930, of which 630 are branded Folli Follie, and the rest in China and Japan, the bulk. So here is the company store locator. Every retail company has a store locator. You can go in and look for the address, phone number of the shops of the company, and Folli Follie is no different. And really, they list 930 points of sale at the cover of the store locator. But already here, if you go into China, you see that only 185 names and addresses are listed, and not 240. Japan looks right at 66. So what did we do? We simply, one by one, about 600, called all of them systematically, and also did like a little Google due diligence to understand whether they show up or not. The check was easy. We just called during office hours and checked whether they're open or closed. If they're open, we ask, how is business? This is a small sample of the database we put together. The database will be appearing shortly on our website for everybody that wants to check it out. The findings are staggering. The companies claim 630 points of sale for Folli Follie. We found only 289 confirmed open. The rest were either confirmed closed or very highly suspected closed, meaning that nobody answered the phone number or the phone number is disconnected. The shortfall was particularly concentrated in Asia. So in Asia, out of 240 declared, we found only 64. In Japan, out of 65, we found only 46. This is very worrying. We'll see why in a moment. So I saw these numbers, and we hired a team, two teams actually, one of Japanese and one of Chinese analysts to go through this due diligence in Asia. And I saw this, and I said, this is not possible. I was expecting a smaller number, but not less than half, okay? So I said, okay, let's go verify. Like Regan says, trust, but verify. So we showed up and looked around. Remember the slide about investing heavily in the US? Okay. They seem to have a Soho Folli Follie shop on Prince Street, okay, at the heart of Soho. So I say, you know what, our fund is based in New York. Let's go have a look. The shop is closed. Maybe we got more lucky with their Madison Avenue and 57th Street. This is a 5-minute walk. After the conference, you're welcome to go check it out. This appears as recently as maybe a couple of weeks ago on the company's website as a functioning operating shop. It's closed. And Google confirms. The only one we found in New York City, and the salespeople of the shop tell us this is the only remaining one in the United States, in continental United States, is in the basement of the World Trade Center Mall. And that's me about a month ago. The other big country is Japan. We say maybe in Japan they have more luck. Let's see how it's going. This is Omotesando. If anybody of you has visited Tokyo, for sure you saw this. This is the Tokyo's 5th Avenue. In the center, you see the screenshot from the company's website. They claim to have a shop in Omotesando. And we went, and it's now a vacuum cleaner shop, confirmed by Google. We heard that they moved to another location. We went to the other location also in Omotesando, and it's now a sneakers shop, despite showing up on their web. We did find one. This is in Shinjuku. Shinjuku is an important neighborhood in Japan. And actually, they were there. They had a presence. We'll see whether we can call that a shop or not. That's them. Apparently, as you can see from the logo, half of that window is Folli Follie. You should compare that with the presence of the competitors that we saw. Then they say, you know what, maybe in the suburbs they're more lucky. Maybe they have more presence in the suburbs. After all, like central Tokyo and New York locations are expensive. So we went to this place I didn't know about called Kawagoe, about an hour train from Tokyo. That's me outside. And that's the presence in Kawagoe. It's a little window, about 10 watches, 50% off. And the salesperson very nicely tells me candidly they're liquidating as soon as the inventory runs out. And she didn't speak English, so you can see the screenshot of the Google Translate up there. We found one in Ginza. Somebody pitched Pandora, which is already suspicious. I don't remember what's the name of the lady that did. You see a Pandora shop on the right. Compare the Ginza Folli Follie shop, which is about a third of the size, and it's in a very low traffic part of Ginza. Compare Folli Follie with Coach. You'll see why Coach, because Folli Follie seems to claim a similar amount of revenue from Asia as Coach that everybody knows. Now it's called Tapestry. On the left is Shinjuku. You saw that. Omotesando, Ginza. So you see in Ginza, Coach has 2 locations. One of them is a huge corner shop. They are in Narita Airport. Folli Follie is not there. In Omotesando, the one you saw before, closed. Coach has a full building, basically. And that's in Shinjuku. So something doesn't match up, correct? So we said, you know what? If that is the case, we made a very simple assumption that it sounds obvious. If you're talking about a retail brand, There should be a straight correlation between the digital presence and the sales of the company. And this correlation, we actually found it among all of the competitors. Quote from the chairman, online is booming. Great. These are Folli Follie declared Asian sales in 2016, and next to it, the Asian sales reported by all the competitors we identified. You see that Coach has 1.2 billion. Folli Follie is almost the same size, 940 million. It's twice as large as Pandora, that somebody pitched before, is 3-4 times the size of Kate Spade, 5 times Michael Kors, and 10 times Furla. Furla is a nice, cute, I'm Italian, it's a nice, cute Italian brand of bags. So this is the sales presence. And this is the internet presence. In other words, this is the website visit in the respective website. And you see, even though Folli Follie declares to be the same size as Coach, guess what? In terms of digital presence, it's the same size as Furla, and is a small fraction of what Coach, Pandora, Kate Spade are. That's pretty strange, correct? This is a screenshot from the third-party provider we used to get the numbers, similar web. Folli Follie, 500,000 website visits compared to 15 million of Coach, compared to 3 million of Furla, which is supposed to be 1/10 the size. Something doesn't match. Instagram, same story. You see Michael Kors, 11 million followers. Furla, I don't know what that number is, but it's less than 1 million. So it's very, very, sorry, not Furla, Folli Follie, less than maybe 100,000 or so. You can see here the screenshot. Compare Folli Follie with Furla, which is supposed to be 1/10 the size, but 10 times as many Instagram followers. Strange. Same story on Facebook. Folli Follie is barely ever there, but all of the competitors happily show up with millions of Facebook friends. Again, this is another comparison with the Facebook Folli Follie and Kate Spade that you may be familiar with. So we said, OK, let's say that there is a correlation, like for all the other competitors, between the digital presence in terms of website visits and the actual amount of sales. What would be the number that comes out for Folli Follie? The number is about 85 million. So that's the number of sales we would expect for a company of that kind of internet presence. They're declaring 1 billion, okay, 10 times less. Again, the chairman, all activities exhibited great growth. We're expanding in our footprint in new markets. We're growing. The trend is great. Great. The trend is great. Google Trends in Japan, 50% down in the last 5 years. And that's supposed to be their growth market. Compare that with Furla, a company 1/10 of the size. That's a growing company. The one below doesn't seem to be. And it seems much smaller, by the way. China, same story. One is Folli Follie, one is Michael Kors. So we went and talked to some people. We asked to the shopkeepers. We asked to some former employees. We talked to competitors, distributors. What do they say? You know, what do they think about this picture? Source one, former employee, quote, the China business is going down. It's a fact. The Chinese business is the worst one because productivity is low. Stores are not making any money, and the management team is just a mess. OK, this doesn't sound like something that's growing at 20% per year. Next, I would say that the brand is poorly managed and in terminal decline, simply due to management. Next, we have less than 100 points of sales in China. The company was declaring 240. FF have been slowly closing down points of sale. Sales have been declined slowly every year. Next, competition is getting crazy. We have little time, so I'm going to go quickly. This is a Chinese large chain of malls. They're growing very quickly, and they said, you know what, everybody's growing except for Folli Follie. I expect the brand overall countrywide to probably be having decreasing sales across China. This is a mall operator. And again, when we made the telephone calls or visited the shop, of course, we spoke to the salespeople, like this nice lady. And this is, by the way, is Furla, it's not Folli Follie. And everybody tells us that business is bad and that things are not very good. So let's look at the financials. We all understand how to read the balance sheet and income statement. This is the usual picture we tend to see every time we're looking at a company who's accounting with questions. Incredibly growing income, negative free cash flow generation consistently over the years. On average, 50 million euros of negative free cash flow per year. Where does the cash flow go? Receivables and inventory. That is the receivables of Folli Follie Asia versus the receivables in days of all the other competitors, 6 times as much. And that's the inventory, also way over the chart compared to the competitors. So increasing working capital. This is the liquidity of the company. 330 million cash on their balance sheet. But you know what? Most of that cash, and the management seems to have been not very transparent during the last conference call when somebody asked them where is the cash. He said that most of it is in Europe and in Asia. But you know what? It's actually in the financial statement because the Asian subsidiary files independently. And I can tell you exactly, the actual number for 2016 is 217 million. Of that cash is in China. We see later why I'm a bit skeptical about that number. So 300 million cash, 200 of cash in Asia. We will see whether that's available or not. One bond expiring next year of 250 million euros. Another one 2 years after that of 150. And in the meanwhile, every year down 50 million of negative free cash flow. We expect an upcoming shortfall of 200 million in next year and almost 400 million in 2021. So they're going to have to issue new bonds or issue shares. And good luck doing that after what we're about to show you. Big trouble in Little China. Maybe somebody of you, I've seen this movie from the 80s. I used to love it. Anyway, Carson Block used to be around. Is it still around? No, OK, but I'm going to quote him anyway. I think that it's his quote. They basically say, they don't dare to lie in China. What do we mean by that? A lot of auditors in China have proven very willing to issue questionable accounting for consumption by foreigners, but they're actually very scared of filing wrong accounting in China because there can be repercussions, OK? So you have to understand a little bit what's happening here. So most of the revenue and all of the profits come from Asia. All of Asia consolidates their revenue into this entity over here, which is called Folli Follie Group Sourcing Limited, $1 billion. That includes revenue from Japan, China, and everywhere else. Japan is much smaller than China based on the size of the network, and everything else is very small. The large chunk here is China. So if China is less than we think it is, everything is much smaller than we think it is. The company lists two subsidiaries, Folli Follie Shenzhen and Folli Follie Shanghai. We don't find the name of those subsidiaries anywhere in the Chinese filing, but we find two things that sound with very similar names, Folli Follie and Bin Lian Yun. These are two subsidiaries that don't appear anywhere in the financial statement we could find with this name, but they appear as subsidiaries Folli Follie Group Sourcing Limited. To our knowledge, the only subsidiaries in mainland China. Okay, so there should be no other sources of revenue in mainland China. We checked them out. And this is a screenshot from data coming from the official government records. It's in Chinese. Maybe some of you speak Chinese. We had it translated for your convenience. So again, official government records to our knowledge. $2.6 million of revenue, of the assets. That could be also I want to make sure that it was translated directly from RMB. But assets is not that important. It could also be 26 million. The picture doesn't change. $25.5 million of sales. Again, $25.5 million of sales. The company is claiming $1 billion from Asia. For some reason, it seems that in China and Japan, companies also file with the government all of their shops, all of the direct points of sales. The number that we see here is 33, which means about $800,000 per point of sale. We found the other company too. It looks half the size. There's only 15 points of sales. This one did not file their financial statements. But if we assume the same amount of sales per point of sale, it's about 13 million of revenue. Total, $40 million of sale from China. And China is 70% of the network, to our understanding of Asia. 48 direct point of sales, and a negative profit, because profit is in the P&L too, of $10 million. Again, we're talking about Asian revenue of $1 billion. How do you reconcile this thing? Yeah, this pretty much goes back to what we just said. How is this possible? So in other words, something is inconsistent. $1 billion of sale, but all of the other signs that we showed you showed maybe a tenth of that. First of all, we have some auditing concern. The company has always been using Baker Tilly as their main auditor in Greece, and somebody, my friend from the analyst that presented before, noted that only a few companies above $1 billion in Europe do not use Big Four. And if you notice, Folli Follie was one of them. Yeah, it's one of them because it was Baker Tilly. Baker Tilly is a second-tier firm, but some people heard the name. I certainly heard it before, and it's relatively respected. Again, after I think 10 years in a row of Baker Tilly, they switched to Ecovis. Anybody knows of Ecovis? I didn't think so. Why did that happen? Could that coincide maybe with the deterioration of the Asian business? I don't know. But I've seen in other similar issues that basically at some point the auditors, they start getting suspicious. They want to audit also the foreign subsidiaries. And that's when sometimes businesses change auditors. I'm not saying this is the case here. Maybe, maybe not. So who are the auditors which are auditing the foreign Asian subsidiary, the $1 billion entity called Group Sourcing Limited? Is Chung & Partners. I don't expect anybody to know them. It's a 2-employee firm. They audit no other public company that we know about or even have anything else as far as we know. They show up on the CPA directory of Hong Kong, but they don't show the services. We're not exactly sure why, but all of the other accounts that do show the services. No footprint in the internet, no information whatsoever except 9 connections on LinkedIn. Talk about a low profile. So I'm going to recap. We've seen a company with a network size that, at least in our checks, seems like a fraction of what it's supposed to be. Asian sales, we have serious concern because of the auditing number that you saw. Digital presence is a fraction, a small fraction of what is supposed to be given the level of sale that is claimed. Liquidity and solvency, at least to us, are a great concern, especially considering that the cash seems like it's in Asia. And finally, the doubtful accounting that we saw. We have seen a lot of these kind of situations. I have never come across any situation where the evidence seems to be all pointing in one direction. I'm going to refrain from saying anything further. I think the facts speak for themselves. You come to your own conclusion. I hope you enjoyed the presentation. Everything is going to be posted on our website, presentation, due diligence, business cards available for whoever wants them. Thanks for being here. Thanks, Whitney, for hosting us.
Just before we break, I think it's worth noting, Gabriel, you look at that, anyone would look at that presentation and assume you're running a few $1 billion and you have a team of 20 analysts.
History is full of bad jokes.
Please turn his microphone on, but just give some sense of, you're a small fund and basically it's you. The message to everyone is a couple messages here. If you're a small fund trying to build your business and all, one very, very good way to make a name for yourself and grow your business and so forth is to do some incredibly in-depth research and then go public with it when you're 100% sure you're right. The last time you did this, as you mentioned in your introductory remarks, the stock went down by 100% in 12 hours. It was halted in 12 hours and never traded again. So I think this is a very, very smart way to build your business, which is what Gabriel's in the process of doing and what I've been helping him with as well. But secondly, it is possible to do this kind of work as a one-person operation. It is possible to do it, and that's it's a pretty smart thing to do. So would you agree?
Yes, I agree, and I would like to point out, because there are some people in this room that actually helped out a lot. One I mentioned before is my wife. There is also Nicholas Jones, which is sitting over there. He helped me out a lot, and of course, credit goes where it needs to go. But yeah, I agree that the structure is very little. In my case, I follow the trend, so outsourcing. So we outsource almost everything, and usually a lot of things is available for a fee. A lot of things are available even without a fee. But that being said, we do have a little bit of an infrastructure. We're working on enlarging the infrastructure, but we think where there is a will, there is a way.
Yeah, I mean, look, I did it 3 times in 18 years of my career, figuring out the internet bubble, the housing bubble, lumber liquidators, as effectively a 1 or 2 person operation. So, the message to those of you out there with running a solo operation or one analyst or something like that is it doesn't mean you can't do incredible in-depth work and come up with really proprietary stuff. And then if you're smart about marketing that and so forth, that's how you build your business and raise money and make a name for yourself. So with that, we're going to break. We're a little behind schedule in this room they're using for something else this evening, so we cannot go late. So let's make this a quick 10-minute break, and we got 3 more speakers.